What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is January 28th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about what might be the most vital topic we need to focus on as investors in the crypto space. After the correction we've been through, we need to assess where we are within the current bull market. If you're not convinced that we're in a bear market, and we here in the channel aren't confirmed on being in a bear market at all, we need to assess now where we are within the current cycle after this correction. How much further do we have to go in the sense of time? What are some reasonable price estimations? And also, if things do go south, how can we be best prepared? And last but not least, I do want to spend some time to talk about the Federal Reserve and why, even if the Fed does continue down this hawkish path of monetary policy, rising rates and reducing the printing of new money and engaging in quantitative tightening, why it might not be the end-all be-all for cryptocurrencies. And last but not least as well, we've got a sponsored interview with I Trust Capital, a crypto IRA solution. So stay tuned for that. You guys won't want to miss it. All right, I've rambled on enough. Let's go ahead and dive into it. The first thing I want to talk about here is focusing on here where we are right now. As we've talked about for the past month and a half, we talked about this correction we had in the market coming back down here from the sell-off in December to the mid $30,000 range. We are now in a range that I would say I feel comfortable adding in, accumulating positions, buying into the fear as the market has generally negative sentiment. We're starting to see the shorts on the leverage trading platform starting to switch closer towards the majority here. And those are all the signs here, again, of people revenge trading, flipping their tune, and of course, the smart money driving prices higher in the near-term future. But I want to go ahead and do something a little bit more important than short-term analysis. I want to do long-term cycle analysis and see if we can garner any information from history here about analyzing cycles. Now, if you go back a couple months ago, back in September, October, November, and you looked around crypto Twitter, YouTube, follow your favorite content creator, the vast majority of people would have promoted an idea of the 4-year cycle. And this was a different way of analyzing Bitcoin cycles. It was the predominant way in most people's minds, but here on the channel, we proposed something different. I'm very big about finding consistencies, pure consistencies in data over history, right? And I'm no expert at the end of the day, but at the end of the day, I really care about finding whether or not I can see repeated patterns or similarities between each cycle in any given market that I'm investing in. And outside of a few other content creators, there's Ben Cohen and a couple others out there who are really great guys. We basically focused in as one of the few people focusing in on the expanding cycle theory. So what is the expanding cycle theory at its core? It is the idea that each and every Bitcoin cycle, rather than the previously touted 4-year cycle theory that predicts that Bitcoin cycles go in 4-year lengths, we focus in on bottom to top analysis of cycles. So the lowest price point, the peak or bottom of the bear market, if you will, with the peak, the euphoric cycle peak of the cycle, the top price that Bitcoin sets in, that closes off the bull market in a sense, right? So peak fear and peak greed that really defines and encompasses a cycle. And along with that, the expanding cycles talk about how each cycle expands by give or take around 11 to 13 months. Give or take a year, basically, right? An average expansion of about 12 months. So we can see here, for example, the first cycle back here from 2010 to the summer of 2011, we had an 11-month cycle. The next one, we had a 24-month cycle, right? We're taking a look at the monthly chart here. So each of these candles represent a month. So a 13-month expansion from the previous one. And then we can see here as well, we went from 24 months to 35 months from bottom to top, an 11-month expansion. And afterwards, right, if we're going into the 4th cycle here, which we've been in for a while, right? And again, some people believe that we're done for, the market's over, right? We're on the idea here that we're still chartering through, but we're going through a consolidation period, just like we saw back here. And again, if we zoom out, this whole theory becomes a lot more plausible. And we're going to start to see here, as much as you might think it's a bit crazy at the start, it's totally cool if you guys don't agree with me at face value. We're proposing the idea that from where we stand here towards the end of January, in the next coming months, towards November of 2022. Not exactly November, it could be October, it could be December, could maybe even step into January 2023, right? We got to give ourselves a little bit of room for error here. We believe in the next preceding months, less than a year, we would be able to charter up towards 150 to 200K for Bitcoin's price. Now, I want to go ahead and just talk about first how we got this figure here of November. We're meeting in the middle here. adding an additional 12 months, an annual year, right? The expanding cycles generally add in about a year. We don't know if it's going to be 11 months or 13 months. Heck, it could even step out of that. It could be something that kind of starts to not per se damage the idea of expanding cycles, but maybe it's not exactly fitting towards being 11 to 13 months or 12 months, right? But give or take, this gives us a good roadmap for where we could see things going. Now, I understand a lot of you might be saying, Nick, we are at $37,000 for Bitcoin at the moment. How on earth could we see Bitcoin go all the way up to 150K, which if we were to just think about it very simply, I know this is a dramatic simplification, but let's say we were at 30,000, right? Some people believe we're going to go to 30K. How are we going to see a 5x in Bitcoin's price up towards $150,000? Nick, you're crazy, right? And that's understandable when you're taking a look at the standard chart for Bitcoin and seeing as well how long it took us to get back up to the 60K range after the May correction. All rational sentiments that you could hold. But when we take a look here at the logarithmic chart, we really start to understand here how much market to scale Bitcoin really can go under in such a short period of time. So let's just go ahead here and again analyze the rallies first off in this cycle. We go from bottom to top here for the first mid-cycle peak, about a 350% rally in about 6 months. Most of which was done, 4 months was sideways consolidation, and we can see from here on out, practically about 2 to 3 months going in towards an actual rally, which saw most of the gains. But again, we'll consider bottom to top analysis here. We can take a look here as well. When we got back up to the previous peak here, in a matter of just about 6 months, and of course our drawing is overlapping, so I'll delete it here, we can see a 390% rally here for price. So what we're estimating for here, again, for the previous top, right, revisiting back here, if we can get back up to this range in June sometime, right, this would take us back up towards around the 65K range. And again, all we really have to see here in order to get back up to really our most optimistic target, which is 200K, is somewhere probably around 175 to 200% rally. We'll go ahead and see if we can get the exact figure. It's a bit difficult to do it on the log chart. Yeah, so we got around 66,000. So a little bit over a 200% rally here. Much more conservative than the other previous mid-cycle rallies than what we saw in the past. And usually towards a cycle close, we usually see parabolic momentum, right? So this is a pretty conservative ask, I would say, in the capabilities of Bitcoin. And again, just like we saw before, right? It's a 6-month period of time. Sometimes they even get shorter in this case if we analyze previous cycles. But again, the cycle's been acting different from previous ones. And we want to understand how the cycle has interacted both not only intra-cycle, right, and the current one that we're in versus other ones, but also as well in the overall ask of what we're expecting Bitcoin to do, right? Is it too much for us to go to 200K? It sounds like a big, bold number. Well, even considering here that yes, obviously this is going to bring Bitcoin to new heights. It's much more difficult to get Bitcoin to these kind of valuation ranges, hence the expanding cycles, right? It takes more time and more liquidity. If we go from the bottom here towards our target range here in November at our target price, you're going to roughly get somewhere a little bit above 6,000%. Now, another important point to keep in mind with the expanding cycles is that with each cycle, we tend to find that there's a general decline in the percentage performance of the previous cycles. So I'll go ahead and showcase that here. We've got back here, for example, in the previous cycle, we had about a 58,900% rally. The only cycle that kind of breaks this rule to a degree is the second one, which was equally, in this case, as exciting in the sense of bottom to top analysis for the percentage gains, over 61,000%, give or take, all right, over 24 months this, over a longer period of time. And then we had a 12,469% rally, right, a big drop here from the previous one over 35 months. And then now we're estimating here that we're only going to see a 6,300% rally from the previous bottom back here in December 2018. We've seen the majority of these gains, and we're going to be able to come up here towards 200,000. Very conservative ask. And really what we're asking for here is a 450% rally from current market prices. Again, some people might say, Nick, that's too optimistic. Well, let's go ahead and take a look at what happened in the previous few cycles. So we're saying in the last 10 months of the cycle that we would see a 450% move. Let's take a look even. Let's go even shorter time frame here in this case, because again, the cycles are expanding. Let's just take a look here from, we'll even go here in June, really, right? In the summer of 2017. In a matter of 6 months, we saw Bitcoin's price go up 750% in 6 months, right? So we're giving ourselves a shorter time frame. If we expand that out here to 10 months, we're talking about a 2,000% return for Bitcoin. Easily done, right? With a nice parabolic finish. We can see here as well in the previous cycle, right? I'll go ahead, clear this one out here. And let's just say, for example, we take the last 6 months of this previous cycle, right, for Bitcoin. 1,600% return. Oh, no, sorry. Actually, this is just in about 4 to 5 months here, right? A 1,700% return and a much shorter time frame, less than half of what we're asking for here, right? And again, I can go on towards the previous cycles. In this case, I can go back to the first one. But again, I don't want to stretch it too much. Right? I'm not saying that we should see a 1,700 or 2,000% rally. What I'm saying here is that what we're expecting here is very well in line with what we should have seen in the past. And it's considering all the elements, the expanding time frame, right, which we've been gunning on for so long, that this is a bull market. It's just going to take a longer time to manifest. And outside of that as well, that we are not going to see as heightened gains as the time before. And that's totally okay, because the gains are still great. There aren't going to be other markets out there, especially if you're invested in the right alts during this cycle, that will outpace Bitcoin, even large players like Ethereum. You're going to be making great returns if this plays out, right? Now, I'm not here to guarantee anything. It's not financial advice, guys, but I can tell you all, I'm exposed to crypto markets. I've traded in equities and other markets. There just isn't a better opportunity in my mind out there that I'd allocate my capital to. Now, the one data science model I want to take a look at here is the realized and unrealized profit. This is a really interesting data science model because it is probably, and I think people maybe might beg, differ, agree, or have other favorite data science models. I think it is a great gauge of market sentiment and whether or not we're getting close to a cycle top, or just generally times where we need to take profits or buy into the market. And what we generally see here throughout history is that anytime Bitcoin isn't within the optimism or denial phase, it's generally a good time to kind of buy into Bitcoin here. Now, of course, we definitely love the capitulation periods, right? The real bear market activity where we really start to drop like a rock here. And this basically, just to clarify, the data science model is taking market cap, subtracting it by realized cap, which is the value of all the coins in Bitcoin that have last been when they were last moved, right? So it's always going to be lower than, well, actually, no, technically it can be higher than market cap. But basically, it's taking all the circulating Bitcoins and measuring at what price were those Bitcoins last moved, right? In the sense of realizing, maybe you took it to an exchange and sold. It doesn't mean that those Bitcoins are sold, but it's a gauge here. We can see how the majority of Bitcoin, right, are in realized or heightened realized profit comparative, in this case to where they're bought. And that is usually when you're in the greedy or euphoria phases, right? We can see here that this red line, which is really the model here, showcases that when we get up in this range, this is when you should start getting a little bit cautious. Doesn't mean you have to sell everything, but it also tells us when the market's getting overheated, similar to like what we saw back here when we got up to 75% back here in February, right? Now, it's important to note, like in 2013, there were 2 times where we came up into the euphoria phase. So don't let people say, see, because we came up here at 75%, that means we're in a bear market. It does not guarantee we're in a bear market. The vast majority of data science models do not point to us being in a bear market. On the other hand here, when we get in this capitulation zone, whether in a mid-cycle correction or even as we're entering into a bear market, historically speaking, with the performance of Bitcoin, getting Bitcoin under 50% or more in the sense of price has always generally been a good discount opportunity, especially if we are in a mid-cycle correction here, right? That means we've got more potential upside to come up here in price. And coming down here in this optimism denial phase, right? This is generally a pretty nice range to start looking to buying in. It's just like where we were back here in July. It's also where we were here in September of 2020 before we kicked off the next mid-cycle rally. And on top of all of this, I want to go ahead and give a full roadmap as to how things could generally play out. Again, do not take this as gospel, guys. This is just my rough estimate here, right? It's the same as when we did the short-term analysis of the mid-cycle correction that we saw as we went throughout the month of January, right? It's not meant to be absolute gospel as to how price will move. But what we can estimate here, if we understand how this cycle's worked, right? Having these really 2 definitive things that have been defining the cycle, these significant rallies, long-term consolidation periods, significant rallies, long-term consolidation periods, right? How can we expect that the cycle is going to play out from here? Well, we've just gotten towards the later phase here, I think, right? The latter phase of this sideways consolidation. It's not going to last much longer. I think it's going to be, 2 months or so to really get out, 2 or 3 months to get out of this kind of grind here, possibly going into the next 3 or 4 months, right? The idea here is that we're near the bottom here for Bitcoin's value. And we're going to start to pick up here going into the summer and the spring here, right? To get up to new highs, not only for Bitcoin, right? But also for total market cap here, right? So what we're taking a look at here, just for clarification, and I apologize, should have explained it a bit better here. And I'll jump to the 2-week chart so we can crunch this a bit. So we're taking a look at total market cap here for the crypto space, all the assets out there. The total market is worth $1.6 trillion. Bitcoin making up about 650 to $700 billion of that value. So what we're predicting here is that we can basically almost double market cap here effectively, come up and reset in a third relative new all-time high like we did here and here, setting the third one, coming down a little bit and making this previous range where usually price starts to topple over, making those previous highs new support, right? Making that a base foundation so we can really spring higher here. And again, I know this might sound like a lot to go from, oh my gosh, a $1.6 trillion market, which already is a great feat from where we've come back here around 80 to 100 billion for crypto. But Nick, you're calling for, in this case, the market cap from where we're at now to go up to 550%, right? That's insane. I mean, crypto's too mature of a market. It can't do those kind of things, right? Well, let's go ahead and again, take a look here at the, we could take a look here, for example, here in September of 2017 after the pullback, right? The last spring event here. Now, if we're taking a look at the 2-week chart, this is 16 weeks worth of price action, and we had an 800% move. An 800% move in just a matter of 16 weeks. What we're calling for here, right? If we do the same analysis here, right? It's 26, right? So we're multiplying it by 2 here. You generally are talking about 52 weeks, about a year, right? As we're expecting that altcoins will have their peak a little bit later on, as they tend to do with the previous cycles. That's just what we have to work with, right? A full year here to do a 527% move. Especially seeing as we've kind of deviated from the general trend line. Not a crazy ask. Lower percentage gains, much longer time frame, very much in line with the expanding cycle theory. This is why even $8 to $10 trillion for total market cap is totally attainable. It's important to understand, guys, that it doesn't mean that everyone in the world is $10 trillion rich. On paper, they are. But in reality, if everyone were to start selling their crypto, even a fraction of it, market values will drop. And that's exactly what this red line has to do with the predictable bear market that is going to come after and wipe away a lot of that value. I think we're going to easily see a 75% correction in the bear market this next time around. But I digress. Important point here is that we've got more potential upside to come. And whether it's exactly 10 trillion or not, I don't know that for sure. No one really knows. But I think that this is a good roadmap for us to follow. And we've been really good here, at least in the short term, of seeing how these long-term consolidation channels have been working. Right? And it's important to note as well here, when you enter in these kind of consolidative channels, compared to the previous lows, you generally find some kind of heightened increase in the lows, right? We saw that here in the March correction in 2020, and we've been seeing that here from the lows here in January at the start of the year, here in July, right? You can see market cap is increasing by a couple $100 billion each time, showcasing that, hey, buyers are coming in at a higher valuation. There's new projects being launched out there. The liquidity is strong. People are raising. Valuations are still gaining strength in the long-term trend. We see that with the highs here, and it's just a matter of time where you have that catalyst, that news story that really squeezes things higher. That's all we've really got to look out for here, guys. And again, the last thing I want to talk about here again on the roadmap here, because I think this is what many people would say is kind of the final argument here, which is, Nick, you've got this great chart up there, and this looks all fine and dandy, but if we don't have the Fed coming to the rescue to prop up assets by printing large amounts of money and keeping interest rates low, if they start doing the opposite of what they've done for the past decade, isn't that going to crush asset markets? Well, one important thing to bear in mind here is that unlike equity markets, right, crypto assets as a whole, specifically, we can just simplify with Bitcoin, have in most cases more than not gone on their own limb. They've gone out and done their own thing. it could be a shaky period in equities, and crypto could be making new all-time highs. In fact, this is a very important thing to keep in mind, back during this period of time in 2017, 2018, for crypto, the Federal Reserve actually started to reverse interest rates back up on a path towards, I think, 2.5%. They had an idea of, I think, even expanding it further, but of course, pandemic came around and that changed the game. But interest rates have gone from the zero range that we think is imperative and must be the case towards much higher rates, and equities still held out for the most part. Yeah, sure, maybe there was some bumps in the road, some corrections, and then, of course, asset prices came back up. But again, even equities held out when these interest rates were doing well. Crypto, in the meantime, was setting in new all-time highs. What really is going to harbor and really start to damage assets in the long run, and again, still won't have as much of an effect on crypto, but will have an effect on asset markets, is quantitative tightening in the sense of reducing the Fed balance sheet. That is the most important, because you are contracting the base money supply where new credit can be created in the economy. And that stifles economic growth, and along with that as well, it will stifle asset market expansion in the sense of their values. So it's an important thing to keep in mind here, guys. But anyways, if you guys have really enjoyed this video, I want to ask you all one thing real quick, if you're towards here at the end of the video. One thing that you guys may or may not know about me is I created my own cryptocurrency startup called DigiFox. I self-funded it in the initial days, and then we did an equity crowdfunding. But one of the big features that we're going to be launching here soon, it's an industry first that's going to allow you as an everyday person in the United States to get a portion or all your salary in the form of cryptocurrencies like Bitcoin, Ethereum, and Litecoin. So if you guys are interested in testing out this feature through my app DigiFox, if you guys are keen to try this out, we're opening up our closed beta before we launch the feature, hopefully later on this month. So if you guys are interested, check out the link down below in the description where you can sign up through the form to get access to the beta. And if you guys meet the qualifications and everything and we can get you onboarded, then we'll send you a link with all the instructions to test it out. We want as many of you testing it out. The cool thing about this is that it's real funds converting to real crypto. So you'll actually be utilizing through your payroll provider at your company or communicating with your employer or payroll department, allowing you to convert a portion of your salary into real crypto that you've got in either your savings account or within your self-custodial wallet. So we're really excited to be launching this feature to you guys. There's still some limitations as we're going through our beta, and it's really a learning experience for us as a platform. But we're really excited to see some of you guys test it out who might be eager. We've got great customer support, so if you have any questions, you can always ping us under the profile tab of the application or reach us through our website. But I digress, everyone. I've rambled on enough. Let's go ahead and dive into our interview with iTrust speaking with Anthony from the team. Alrighty, guys. So we are here today with Anthony, who is the VP of Branding over at iTrust, one of our partners here on the channel, focused on helping you save when it comes to investing in the cryptocurrency space. Anthony, it's so nice to have you back here on the channel, man. It's been a little while since we've gotten to chat, and there's been a lot of exciting things going on with what you guys are doing at iTrust. So thanks for making the time, man. I know you guys are crazy busy right now.
Yeah, things are crazy, but it's always good to connect with you, man. I'm glad you're doing well and always happy to connect again.
Absolutely, man. So let's go ahead and kick things off, right? I want to go ahead and start off by spending a little bit of time to try to answer the big question about what you guys do. iTrust is an IRA cryptocurrency platform at its core. But a lot of people, I think, including myself when I got started in finance, kind of get choked up at hearing IRAs and these fancy acronyms. So at its core, what is an IRA and why could it be important for someone investing in crypto?
Yeah, it's a great question. And most people will encounter iTrust and crypto IRAs. And sometimes they don't know what that IRA stands for. And, other people have heard of it. And so it just stands for Individual Retirement Account. And the US government many years ago created a sort of program that allowed Americans to invest into these IRAs. And it just essentially provides tax benefits. So a lot of us are investing in crypto on a Coinbase or a Gemini or a Kraken. And all of those trades are taxable events inside of an IRA. Trades are tax-free. So we have built essentially one of the world's first platforms that are a crypto IRA, investing in crypto within your IRA and getting those tax benefits. It's an amazing new market segment, and adoption is growing rapidly. And we're just so excited to be one of the pioneers here.
That's very cool, man. And it's really cool because I remember when I was getting into finance and I was originally investing in asset markets like equities, looking at, commodities, fixed income. I was always craving for something like this to be deployed in the crypto space. And what's nice about an IRA as as this kind of program that's allowed for users to basically maximize a certain couple $1,000 contribution each year, it allows you to basically kind of have a base foundation similar to how you'd have a savings account with a rainy day fund, to be able to have a certain amount of portfolio for retirement as an incentive to think long term. So I think IRAs are a great product. It's best to maximize that contribution according to most people when it comes to finance. So I wanted to go ahead and talk a little bit about some misconceptions, because I think when you open up an IRA account, you actually kind of hinted on one of my misconceptions, Anthony, which is that when I first heard about IRAs, to me, I was like, this sounds too traditional and I wouldn't be able to trade actively like I do. So that might be a restriction point. You can actually trade within an IRA. You have pretty much all the same flexibility that you would normally, but it's just a matter of deferring that tax obligation when you'll be paying a lower rate. Is that correct?
Yeah, totally. So, there's the traditional IRA that provides the sort of tax write-off and then defers the taxes until retirement. There's the Roth IRA that provides no tax write-off, but sort of grows tax-free. Obviously, it's a little deeper in the tax rules. People want to work with their financial advisor. I'm not a tax advisor, financial advisor, but people typically pick one of these type of shelters. And then they, again, as you mentioned, are able to invest and trade inside and get those tax benefits. And really at iTrust Capital, we have people who are just long-term investors. They're just buying, they're accumulating, and they have this kind of long-term vision. And there's other people who are actively trading. Maybe they're managing risk, checking charts, and every time they make a trade, they're not getting hit with that, short-term capital, long-term capital gains. And so, it's incredibly exciting. And coming from a personal finance background, really being into the early retirement FIRE community, I started getting into IRAs early. And there is a misconception, as you mentioned, where people say, hey, I don't want to put money into something that I can't access till I'm 60 or 70. And there are some quite nuances around like Roth IRAs. You can take out the principal at any time. And even there's ways to file for early retirement. And again, these things require a financial advisor and a tax planner. It needs to be done in accordance with rules and regulations, but they're actually quite flexible vehicles. And I think the market's slowly becoming educated. Like, I love crypto. What are some things that might be accessible, like an IRA, that can make my financial plan even more robust and really attractive?
Yeah, man. I was thinking even like today about how helpful an IRA can be. Like, you've got the Fed news that's coming out today, which I think is going to be a major determination of crypto markets, equities, you name it. And, what's so nice about an IRA is you have that flexibility to be able to get in and out of the market, so long as you understand your fees or any cost structure around the trades. But in an IRA, you're not going to be hit with that tax bill, which you're going to owe using a normal exchange if you make a trade and have capital gains realized. And also, of course, capital losses. But I digress. I mean, it's generally such a nice, flexible vehicle that, again, even if you're more passive, it works for you. But at the same time, it also works great for traders if they're trying to build that base security net for the long term.
Certainly, the flexibility is key.
Exactly, man. And there was something that, again, another thing that I think, as with any exchange, when people are like, I've got an exchange platform, we offer this. I think the question I always get is like, what are the range of coins and tokens that you guys support? So what are some of the big names that you guys have and stuff that give people that diverse exposure? It's not just Bitcoin and Ethereum.
Yeah, totally. So, the usual actors, like, I like to bunch things into a few different buckets, right? You have the layer one blockchains, you might have some decentralized finance, and you might have some maybe metaverse plays, and there's other assets. So, Bitcoin, Ethereum, Cardano, Solana, Avalanche just launched a few days ago. And then, the DeFi, the application layer, the Uniswaps and the Aves and the Sushi and the Makers and Yearns, et cetera. And then, the metaverse plays, right? Whether it's Decentraland Mana or tons of others. So I think we have maybe 28 assets at this point, constantly adding based on the what the kind of community is asking for, as long as it sort of fits our sort of compliance requirements of what we approve on the platform. Mm-hmm. And so it's not like you get in here and you're like, you don't have access to the things you want. It's the usual suspects that most people would have in their portfolio, whether it's by market cap or volume or demand. And so another thing is the fee. So we like to compare ourselves, benchmark ourselves against like a Coinbase, like the market leader. Typically, investors are paying 1.5% per transaction on the Coinbase platform. We charge 1% per transaction. So not only do you get those tax benefits, but then you're not really losing out on the fees, right? And we
Yeah.
used to even have a monthly fee because we provide institutional cold storage through, various partners like a Coinbase Custody or a Fireblocks. We used to have a monthly fee, and we've even removed that now as well. So it's potentially lower trading fees than Coinbase with tax benefits and still some of the same assets that you would likely want.
Very cool, man. I mean, honestly, all the assets you listed off and stuff, they're kind of, I would say in this case, kind of the blue chips. They're established, they've got liquidity. The ones that you would find on like a Coinbase or Coinbase Pro. One thing I wanted to ask you in this case, Anthony, about like this IRA platform that you guys have built at iTrust Capital. I'm very excited to see what you guys want to do long term with the platform. We can dive into that in a little bit, but I think again, the thing that people always come to is like the competition, right? And I remember, and I want to speak on behalf of this and stuff because I know you guys are very good about being neutral and stuff and just kind of piercing through and doing innovative things. I want to say this as someone again who went through that journey trying to look for an IRA solution. You guys to me stood out as one of the up and coming players and stuff back about 2 years ago when we started chatting, because there just wasn't much good opportunity for crypto IRAs. They really kind of took their position to their advantage. I won't name names, but again, I want to hear from you guys, from your pitch, Anthony, like what do you guys think is your key selling point? I think the fees are definitely one of them for sure.
Yeah. So, there was this old guard of companies who were doing self-directed IRAs, and they had very high fees, and it felt very much like a Wolf of Wall Street model, right? Like these hotshot brokers. And we came and we were really the first like fintech company, right? We built this self-trade platform that clients, pay low fees and they really control it. And it's within this compliant IRA environment. And now there are some smaller competitors who kind of have seen our model and are trying to copy us a bit. And I think competition's great. It makes us want to continue to be the leader as the largest and the lowest cost. And it doesn't make us feel complacent. So our key benefits right now, looking at the entire landscape, is we still have the lowest trading fees or on par. We have what I consider by far to be the best customer experience. So, US based employees who are here to answer your calls and speak kind of one-on-one with you and answer your questions and make sure you are doing whatever you want to do on the platform. Robust cold storage and security through our various partners that we're very public about. And what I'm excited for is the next 24 months of innovation. We have an amazing product and development team who have built out roadmaps. And I think the first wave of a crypto IRA like iTrust Capital is that self-trading. You buy or sell on the platform. And what is to come with secure integrations with, say, staking or DeFi or lending, and eventually wanting to be that kind of full stack software. Now, how long does that take? I'm not sure. But when I think of the vision of a crypto IRA, is doing what you would expect to do in crypto with that security, but then the whole time potentially getting tax benefits.
Very cool, man. No, I like that you guys have, again, centered it all around the IRA model, because I think people don't know how big IRA markets, similar to like 401ks, how big of a market opportunity this is. And I guess that kind of leads me towards the big news you guys had. And again, I want to give you, I know I said it on the news mention the other day, but seriously, a big congrats to you guys. I know it's not easy to not only scale up a startup, but to go out there and pitch and raise capital. You guys raised an over $125 million round, unicorn valuation over 1.2 billion. First off, Anthony, congrats to you guys. Like seriously, great work. I wanted to ask, with this new capital that you guys have, I not only see that you guys have been able to cut down on the fee model, making it more beneficial for early adopters and people on the platform, but outside of that as well, what do you guys plan to do with this new wave of capital coming in? What's it going to allow you to do that you couldn't do before?
Yeah, so the first key is continue on growing the brand and really building that community, right? So we're going to continue to be in the weeds with the crypto community, building kind of what they want, right? And so we'll be at Bitcoin Miami 22. We want everyone to come visit us. We'll probably do kind of a campaign around that, and hire more employees. As a growing company, finding and attracting and retaining top talent is super important. And obviously having growing that team, having a great product, great dev team, and everyone else to support that, so we can build the features that is so in demand by our community. And so we really listen to our clients, we listen to the community out there, and we kind of hear what people want, and we try to build it as fast as possible, as long as we're able to be compliant and follow kind of the rules and regulations that we do. And I think it's going to be an exciting next couple of years. Left Lane Capital helping to lead this round with us. Now we have a very strong war chest that we are using very strategically to grow the brand, grow the community, continue to build great products, and be the leader in the crypto IRA space.
Absolutely. You pointed out one thing, Anthony, that I've kind of come to learn and stuff over the past couple of years with Digifox, which is that, when you're running a company, especially a startup that's doing something quite innovative, you can have, the best engineering team, you have best marketing team, right? But unless you have an open channel where you're collecting feedback and you use that feedback as critically as possible to understand what your target audience wants in your startup, that's the only way you're going to guarantee that you win out in the long run and stuff. And I think that's awesome that you guys, again, I know the support you guys provide is great and that you're using that within the product, because it's been awesome to see it evolve since we first met. So Anthony, I think this is awesome. And for people who are curious to learn a little bit more about IRAs as a technology and what iTrust has to offer, I'll go ahead and leave a link down below in the description so you guys can get a taste of what, in this case, iTrust has to offer, and to see if an IRA is even for you. It's no pressure. You can see the benefits against the cons and stuff in this case around IRAs, understand the legal structure of an IRA. But I'll have a link down below in the description where you guys can use that to sign up. And Anthony, outside of that, like outside of the website, like, is there any other places that people can go to learn more about iTrust Capital as well?
Yeah, I'd say the link in the description. We're going to be doing more video content soon, hopefully building out our YouTube channel more, seeing people like you who make such great content. It's very inspirational. And so we want to contribute content as well. I'd say exciting news that we're going to be rolling out probably this week as a test is same day or next day ACH deposits. So clients who make an ACH contribution, instead of waiting a few business days, are hopefully going to get it hitting, as soon as possible, say a day or same day. And then in addition to that, I forgot what the last point is, but it's all gravy. It's always good connecting with you and connecting with your community and growing ours. And we're excited for the future.
Anthony, if you were working at a startup, I would be very concerned if you had all the points on your mind ready to go.
Exactly.
I know you guys are racing around stuff, so I appreciate you. And again, we'll put any relevant links or things in the description, guys, that we can think about afterwards. But Anthony, thank you so much, man, for making the time. It's good to see you, good to see your face and hear from you. And congrats on everything you guys have been seeing so far. I'm really proud of you guys.
Thank you very much, brother, and continued success to you as well.
Thank you, man.